Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, I'm Vinay Joseph and welcome to another edition of our weekly podcast, The Week That Was, where we summarize financial market moves over the last week and what we are watching for ahead. Last week was a tale of two halves, with Indian equity markets rallying as the RBI policy was more dovish than expectations amid positive global cues. However, US consumer price inflation surging to a multi-decade high of 7.5%, which was not only much higher than expectations, has also further driven a further reset of higher market expectations of Fed rate hikes. The street is now expecting Fed to raise rates 6 times over the course of the year, with a possible 50 bips penciled in for March policy itself. Indian equities sold off sharply on Friday on the back of this. Overall, for the week, the Nifty index was down 0.8%, underperforming their developed market and emerging market peers. The broader market saw deeper cuts, with the mid-cap and small-cap indices down about 2% and 5% respectively. Metals was the only sector in green, while capital goods, realty, FMCG, and IT sector saw over 2% cuts for the week. On the other side, bond yields fell across the curve amid RBI's surprisingly dovish policy tilt, with the RBI keeping both repo and reverse repo rate unchanged and maintaining its accommodative policy stand. The street was expecting an increase in reverse repo rate. Most surprisingly for bond markets was the dovish tone of the policy statement and the low FY 2023 CPI projection of RBI of 4.5% compared to consensus expectations of above 5%. The 10-year IGB yield for the week fell 17 bips to 6.7%, back to levels pre-budget. Corporate bond yields also across the curve fell by 30 to 35 bips. On the flip side, the INR depreciated by 1% to close above 75, as the RBI's dovish rhetoric relative to market expectations acts as another headwind for the INR amid rising twin deficits, particularly at a time when major central banks are adopting a more hawkish tone. On commodities, the rising geopolitical tensions was the talk of the town over Ukraine after the US warned that Russia could take further military action. This drove commodity prices higher, with gold rallying and crude crossing $95 per barrel. For this week, India's CPI reading is likely to come out on Monday, and this will be watched closely, especially post RBI's contrary stance to other global central banks. The street does expect inflation to rise higher to close to 6%, which is the upper bound target of RBI's target range of 2 to 6% for CPI. Any possible negative surprise could drive yields higher, as expectations will build for possibly faster normalization of policy by the RBI. Thank you for listening to our podcast, and if you find it useful, please like and subscribe. And have a great week ahead. Thank you.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.